This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, nononsenseforex.com, and podcast players everywhere. Episode 193 is brought to us by Bybit. After the largest hack in crypto history, Bybit barely batted an eye and made sure anybody who wanted out got their money and really answered the biggest fear that every crypto trader has. Should the worst case scenario possibly happen, what will happen to me? Well, now you know. I've said it many times before on here. It pays to be large, well-capitalized, and well-run. And oddly enough, I've been seeing new signups this week on Bybit. I think people are starting to realize this. You can either wonder what would happen, or you could have a pretty good idea of what would happen should the worst case scenario occur. And if you're interested, even simply as a backup account, just in case, go down below, click the link to the Bybit blog in the description, scroll down to the bottom of that blog and click my affiliate link and get yourself started. You're going to like what you see, because with Bybit membership has its benefits. It is the 10-Minute Contrarian Podcast, and a very quick scheduling note, as has been a recurring segment on the podcast. I'm flying out again, not because I live this fabulous life where I just vacation all the time, but I have to go back to the U.S. and handle some family matters for a few months. And Saturday is going to be a big travel day, so on audio, you will probably be getting this on Friday. And then Saturday, I'm going to try my best. But if it doesn't come out on YouTube, it will come out on Sunday. And then we should be back on track after that. If there's any benefit to this, we will hopefully have a little bit less background noise from here on out. But let's go ahead and get into the episode. Now, fans of the podcast and people who have been around with me for a long time, this is not the first time we've done an episode like this, hence the title. But I think it's important that we do this for many reasons. One, it's very easy to forget. This is our own money on the line. People can still get emotional even if they follow our logic to a T. Two, there are newer people who tune into this podcast every week. And it's very important they get on board with our investing philosophy, because if you are not, then there's really no reason to be here, and many of the things we talk about aren't going to make a lot of sense. And so for the OGs, thank you for joining us for another installment of Crypto Armageddon and what to do about it. So to catch up, we had a few weeks ago what they called the worst crypto drop in history since the FTX debacle we had years ago. And I was like, over what? It was supposed to be over tariffs, but the tariffs didn't happen. And so anytime there is a highly illogical drop, I'm very interested, and I usually start buying. It's not like I really want to buy more crypto. It's starting to make up way too much of my portfolio, which that in itself, contrarians, will be its own episode. That is on the spreadsheet. Fear not. We will talk about it. But I want to buy what's cheap. There aren't a lot of things out there that are cheap right now. There's only a handful of things. We've discussed them here on the show. And you can't pass up on opportunities like this because it's very unique to the crypto market. Things drop for almost absolutely no reason. We are very fortunate to live in a time where you have a market like this that has all these irrational investors inside of it, all these very novice investors inside of it who are not doing what they are supposed to be doing and investing money that they can afford to lose or investing money they don't deeply care about. So when things drop, they drop a lot because these people freak out, or they have certain levels that they said, okay, if it hits this level, I'm going to sell, which is fine, I guess, but I take it back. That's actually not fine. We'll discuss in a moment. But either way, it makes drops a lot more exaggerated than they actually should be, which gives us these amazing sales in the market that you just don't see anywhere else. And we're already seeing this little phenomenon start to go the other way as more disciplined investors are entering the fray. And they're mostly doing this through Bitcoin. And that's why, Bitcoin has always dropped a bit less than everything else, but it's starting to drop a lot less than everything else is because of the ETFs and all the money that has flowed into Bitcoin recently. Again, you have sovereign nations going in there. You have intelligent, seasoned investors going in there, and they don't behave the same way these amateur investors behave. And there will come a day where this is going to pertain to most of the market. But for now, you're mainly just seeing it in Bitcoin. However, what we saw in the last week, maybe two, is some of them even started to tap out a bit. And that explains the drop even further. Now, I'm recording this on Friday. We are at 84,000 Bitcoin. We had dropped below 80 for a moment. I almost kind of wish we were still there because I like it when emotions are a bit higher than they should be, and then I can come in and say, hey, look, no, everything's fine. Understand why things are happening and react accordingly. But still, 84,000 Bitcoin is a level that a lot of people thought we would never, ever see again. There's so much euphoria towards the top, as there always is. And I warned everybody against them. Like, look, all the lights are green. You're hearing things like infinite money glitch, which is really a red flag to me when I hear things like that. And you're starting to hear some prominent, established crypto podcasts and YouTube channels actually start talking about meme coins as if they're a viable asset, as if they're actually a good idea all of a sudden. If only these people were more intelligent, like your boy here, and said there is absolutely no place for these things at all, regulate them out of existence, fuck your couch, I don't want them here. I've been saying this for years. When you have this grown-up TradFi money finally stick their heads into our world, we need to show them that we are serious and that by investing in this space, you are making an intelligent, mature decision. But what did we end up showing them instead? We had a string of absolute embarrassments on a global stage with the Trump coin, the Melania coin, the Javier Milei coin, and then the shit that Kanye's doing. And now you have what's going on with meme coins, and then you have this new investor class, the investor class we have been begging for ever since crypto began, finally coming into the market, learning about it for the first time, getting into these ecosystems, and what do they see? You finally have this brand new asset class that the world is starting to take very seriously for the very first time. And these more sophisticated investors get there and they look around and they're like, did I just step into a Chuck E. Cheese? Like, what the fuck is this? I told you, I understand that they were the gateway for some of you into this ecosystem, and that's great. But that's literally the only redeeming quality I can think of with meme coins. I said, I tweeted earlier, regulate them out of existence. Go regulation, go big government. I am waving the flag over here. And I saw a tweet this week from David Sachs, the U.S. crypto and AI czar, saying that the SEC has decided that meme coins will not be classified as securities, but as collectibles. So I'm not sure exactly what that's going to do. I do know from being a gold investor, when you talk about collectibles in the United States, tax-wise, that's not a good thing at all. Tax-wise, that is death. So maybe that is step one en route to wiping these things off the planet. But unfortunately, as many people are saying, meme coins are dead. I don't think they are. I think we will see a resurgence of these again, especially when the market starts to bull again, because you simply cannot get rid of human nature. And I get it too. I feel for Generation Z and this new group coming in that was the first generation to not have it better than their parents. Can't afford a house, can barely afford a car, can't really afford anything. So they're forced to take more chances. Therefore, they're going to be more susceptible to things like this. I've been a Forex trader for 15 years, and you would always see, well, why do Africans keep falling for these stupid, boneheaded Forex scams? I mean, everybody was falling for them, but it was really typical to Africa. You would see most of them start in Africa, and they would all make a bunch of money before scamming their clients and then running away from it, and lather, rinse, repeat over and over again. Why did this keep happening so much there? Well, because same thing that is going on to a lesser degree in the West right now. Younger generations just don't have a lot of hope when it comes to a good life, and therefore are susceptible to things that normally don't make sense, But when you just simply want to believe, you will allow a lot more nonsense to pass through your filter. I get it. We've all been there. We've all been scammed before. And we allowed it to happen because at the end of the day, we just wanted to believe that there was a better life out there. And this opportunity over here off to the side was the way through. So, yes, I'm blaming meme coins for this last drop we just had because I'm connecting the dots, I think, pretty well. But I certainly do not think they are dead. Mark my words. We will see new iterations of these in the future for a very long time until they are finally regulated out worldwide, which I don't know how you're going to do that. And I would be remiss if I didn't say this. At the same time all this was going on, remember, you have these intelligent, mature investors coming into our world, and what do we show them? We show them meme coins, and then Bybit gets hacked for $1.5 billion, which just shows everybody else that this industry is still very susceptible to things like this. TradFi far less so. And remember, TradFi wants to keep their money safe above anything else. You need to show them that there can be really great returns, but you also have to show them that the risk is fairly mitigated. And there is a meme coin tie to all this because the Lazarus Group, the North Korean hackers that stole this money, were laundering a lot of it through Pump.Fun on Solana. Again, imagine being a long-term TradFi investor who is finally getting interested in Bitcoin, and all of a sudden you get there, and this is what you see. And now I know Bitcoin maxis who have been doing nothing but smelling their own farts for the last 10 years are doing it even more now, saying, hey, this just goes to show how Bitcoin is superior. Well, in this particular way, it is superior, I think, Bitcoin and Litecoin both. But I would have far less money had I ignored the altcoin space this entire time. And as an investor, which is what I am, sorry, maxis, you're never, ever going to get me over to your side. So now that I hope we have a better understanding of why this drop occurred, we can now look towards opportunity and look towards the solutions part of this solutions-based podcast. Now, we know, I'll reiterate this because I say it all the time, the things we invest in here in the crypto space really normally have nothing to do with these drops. Did this drop have anything to do with Chainlink? Did it have anything to do with Litecoin or Avalanche or IMX, which hit my break-even stop loss? If you follow me on Twitter, you know this. I had to actually get rid of my position. I already took a little bit of profit off of it, but as soon as I do that, I move stop loss to break-even, and it actually went back and hit it. But it makes sense. Things like this are going to happen because of what I said earlier in the show. Think about the people who are normally investing here. They are not long-term like we are. You must be in the investment space altogether, but especially in crypto. That has been our superpower. We simply just sit back and hold as long as possible because we believe that crypto will someday be the future of money and payments and computing and global commerce and all of these other things. And if we just simply buy and hold, not forever, but almost forever, and then every time crypto goes on sale, buy more when it's undervalued, that has been the absolute best strategy on planet Earth. We do what rich people do. Who knew? But look at your typical investors in some of these sectors, especially gaming, which is where IMX falls. Do you really think the people who invest in the gaming space have the same mentality we do? For the most part, they don't. So when you have years go by and gaming has not caught fire yet, we will have episodes on this, by the way. I said 2025. I don't make time predictions like that, but I just said I would expect to see some real movement by 2025, so we'll see. But we're not seeing any movement right now. And so if you're going to give up on something, this is going to be one of the sectors you give up on, and I think that plays right into our hands. I said on Twitter, I can't wait to buy more, but I have to follow my own rules all the same, as do you. And one of those rules is to buy when things are cheap and when they are on sale. And again, this drop had nothing to do with everything that I hold, hopefully all the things that you hold as well. And so now they are on sale, and that is why I have bought more. Now, I bought a couple weeks ago, and so I will not be buying right now. But to reiterate, here's the mentality I think we should all have here. First of all, you're not going to call the bottom, so don't worry about it. 5 years from now, when you bought Chainlink at $14, I think you're going to look extremely intelligent and you're going to be very, very happy. If you buy it at $18, you're going to feel the exact same way. If you bought some under $7, like I did, but you bought more in the teens and even the 20s, like I also have, I think you're going to be very happy. It doesn't matter. Trying to put too fine of a point on it is exactly how you miss out. And we have seen in the past, throughout the lifespan of this podcast, when you get sales like this, the last thing you want to do is miss out on them. Not financial advice. But remember, too, there are ways to do this. Maybe you think the market's going to go down even further. That's fine. What I have suggested in the past is going half in, half out. So, well, it doesn't make any sense. You're just really going half in. So you take half of what you would normally spend on a sale like this, and then you save the other half for the potential of it dropping further. At least you took advantage of the sale. At least when it's all said and done, you're not going to look back and be like, oh man, I really missed out. I could have gotten it cheaper, but I didn't get anything. At least you got half. If it starts going up for the rest of our lives tomorrow, at least you took part in it. But you also allow room for the market to drop further if it's going to, and then you can scoop up even cheaper prices later. A really good heads you win, tails you win more type scenario. If anything, though, you just want to make sure you do the opposite of what the amateurs are doing. Like I've mentioned a couple times on the podcast, I have some close friends that are just now getting into crypto, and they do not know what they're doing. And what do? When Bitcoin was at 105, they were all blowing up my phone saying what to do. And now that Bitcoin is at 85, it's absolute crickets. They're probably terrified to buy Bitcoin at a much cheaper price than before. As absurd as that sounds to most of us, they don't want to do it. So simply do the opposite of what my friends are doing. God love them, but they, like I said, they're brand new to this, and you're going to be just fine. Do what we have been doing on this podcast ever since the beginning of this podcast, and you are going to do just fine. Most of us are all way up on just about all of our crypto positions, and certainly up altogether on our crypto positions. Now, all of this being said, I would like to present to you a bit of a bear case, and I say a bit. There's actually two, but we're going to save one of them for next week because it's a completely different topic altogether. But if you look at your monthly charts, we had the episode talking about the monthly chart, and it has been an absolute cheat code unlock for us ever since. It's something I've been using for a couple years, but I've really gotten on board with it because now I have a good sample size, not just in hindsight, but actually using it. And if you go to a monthly chart of Bitcoin right now, if you're watching this on YouTube, you could probably do this with me. But I know the majority of you are on audio, so maybe just save this and come back to it once you get back to your computer. Now, I am going to throw some technical analysis at you that in 7 years of doing social media, I have never shared once. You guys know the reason I do this. I've said it before. I tell everybody what to do point by point, and then if there are any exceptions, I mention them like years later sometimes, because I understand that the no-nonsense Forex system of trading is a brand new system that nobody has ever seen or used before, and there are a lot of moving parts, and the last thing I want to do is say, oh, but there's exceptions here and there's exceptions there. That's just going to confuse people more than they already are. But fans of no-nonsense Forex are going to be very surprised to hear what I'm about to say. Especially long-term, and especially in investing, more so than trading. There is a specific chart pattern that I actually like, because I think out of all of them out there, and I have no proof on this, there is no proof on this, and there's no way to really know this. I think this is the most accurate of all the chart patterns, and it is what's happening right now in Bitcoin on the monthly chart. You have something called an engulfer, an engulfing candle. If you don't know what those are, look it up. It's very easy to spot. And we are currently seeing a bearish engulfing candle on the Bitcoin monthly chart. Now, if you're looking at this and you want to go historically here, pull up your chart. I have mine. And you can find a bearish engulfer on April of 2024. And that did signal lower price action, not a lot. That pretty much ended up forming a bull flag. But then if you go back to January of 2023, that's a good example of a bullish engulfing candlestick. And that signaled the next move up. Now, if you go back even further, you're going to see some failures, in particular October of 2021 to the bull side and May of 2021 on the bear side. But you have to remember, too, that was extreme volatility. Things, thankfully, are getting a little more rational, a little more sensible. So I expect some of these things, even chart patterns, which I don't like, to be more accurate than they were in the past. And so if these things are true, and we're getting a bearish engulfing candle, then I think there is a better than average chance that we may be going down for a bit. And if you think about it, it does make sense. After this drop, as is always the case with drops, we have a long way to go to get back to where we were. Now, we know that in the crypto world, all the lights are green. All the things we have been waiting for are here, and there is so much more coming. My God, if you had any idea how much TradFi is not only coming, they're already here, you would be bullish beyond belief, as am I. But in terms of when these things take place, we still don't really know. So we may have a period to where these things just don't go up and these things remain on sale. Now, this is not a green light for you to sit there and stall and wait. But at the same time, too, going back to the half in, half out method, as well that you're probably, if you have a steady job or a steady stream of income, you're going to have more money down the line, too. So if you just want to make a normal buy now, and then maybe when you have more money in the future, do it again. You could also do it that way. That's my mentality, right? Because I've tweeted this out in the past too. I have multiple income streams. They fluctuate up and down. But what I also do is I live in a much cheaper place to where I'm probably paying 50 cents on the dollar to live in a very developed part of Latin America. People think I live in a tree. No, I'm living in very developed, functional places and paying 50 cents on the dollar probably if I'm being generous. So every month I have money to invest. Every month. And I don't like to buy stupid things. I would rather buy investments with that money. It's just how I'm wired. So if you feel the same way and you have a steady job and you don't live well above your means, then you wouldn't even really need to go half in. You could go all the way in, let some time pass, save up some more money, and then see where the market's going. Maybe by then the best opportunities won't be in crypto. It'll be somewhere else. But either way, I wanted to make as comprehensive of an episode as I could so we can reiterate the things we've talked about in the past, get ourselves back on track, and get ourselves ready and prepared for the future of this market. So I hope we're all there. I hope we're all back on track. And just remember at the end of the day, regardless of what market it is, when there's doom and gloom, when there's blood in the streets, that is when you are supposed to buy, when nobody else wants to. Because as we have learned time and time again, over and over, especially in the crypto market, when you do this, you are not being crazy. You are just being early.